May the 11th. I'm delighted today to be joined by Omar Abaidli, Aldo Flores Quiroga, and Shuaib Boutamin. Thanks, gentlemen, for joining us today. Omar, Director of Research, Bahrain Center for Strategic International Energy Studies, welcome. I'd like to start by getting your take on the regional dynamics here in the Gulf, where you and I sit. Few headlines continuing on Iran, US. My sense is things have calmed down a bit in these talks, maybe have a little bit more grit than they've had in the past. What is your sentiment, and are we going to see action in the Gulf here?
We thought good morning. Well, we thought the talks were going well last time until the negotiating team from Iran was assassinated. So I would temper the optimism, but I do agree with you that things seem a bit better than they were a couple of weeks ago. Having said that, there's a very large American military presence in the region, ready to be deployed at notice, and we saw an escalating build-up in Venezuela that obviously culminated in the arrest and removal of Maduro. So while things seem to be at least a little bit more breathing space than perhaps a month ago, everything stays very fragile, and we've seen that a significant part of the American/Israeli negotiating strategy is responding to what they perceive to be as intransigence through significant escalatory action. So we're all unfortunately, still in a state of extreme uncertainty.
And what do you make of Israel's sort of, I mean, at least in public, what's happening behind the scenes, we can't know, but they've been a bit more outspoken the last week. I mean, what does that signal to you?
Well, I mean, what seems to be, circulating in the media is that the US's stance is significantly softer than Israel's, and that Donald Trump's priority is not changing the Iranian government, but it is striking a deal. Whereas Israel's government seems to be at a stage where it does not trust any sort of long-term agreement or the Iranian government, and perceives a change in the Iranian government to be the only sort of part of its long-term strategy towards securing its interests. And so given that impasse, now it's possible that they both end up arriving at the same conclusion, given in light of how the Iranian negotiating team advances its interests. But for sure, in the meantime, Israel will be looking to push its worldview through its various channels, and for that, and that's a worldview that, unfortunately, for the time being, seems to be consistent with a reinitiation of armed conflict.
Okay, Shuaib Boutamin, Energy Advisor and CEO of Vanadrol Energy. Good morning and welcome, Shuaib. Let's talk a bit about what this is doing for the oil markets. There's consensus that the Iran issue is providing some sort of risk premium, which has been built into the oil price now for months. Would you see that is really what's keeping prices above $60? Would you agree with that? What is the state of balances as we've started the year now in 2026 in terms of supply and demand? Conflicting opinions on whether we're tight supply or we're not tight on supply these days. Different schools of thought out there.
Yeah, good morning, Diana. Good morning, everybody. Yeah, I think well said. Risk premium, what's happening in the Strait of Hormuz, I think, at the moment, because we know that more than 20 million barrels of oil cross the strait every day, and more than 100 billion cubic meters of natural gas per year also cross the Strait of Hormuz, and mainly from Qatar. So I think, yes, this is the main. I think this is the risk premium in the region. What's really enabling the prices to go to $68. But not only that. Tariffs and the rising, let's say, the tensions and the tariffs imposed by the US. Last Friday announced that he will impose 25% tariffs on any country will deal with Iran. Same, I think, for Cuba. I think this is what's really making this tension, and which really participating to increase oil prices. But the result of that, I think, the result of these tariffs is pushing countries and pushing allies to be, let's say, rivals. And this is a good example. I give the example, strategic approach now between Canada and China. As you know, China now is the main buyer of Canadian heavy oil, and to replace Venezuelan heavy oil. And I think this is also negotiation now between China and South Africa about minerals. I think this is a new, let's say, a new dynamics in the global oil and gas is happening. It's changing the position, changing the orientation and distribution of the market. But let me, I remember one thing now from April, talking about the prices, and maybe go to the OPEC. So since April, when the OPEC Plus decided to invest more barrels to the market, today till now, they increased 2.9 million barrels of oil. It's almost 3 million barrels of oil. But if you go to April 25, oil prices, the average was $68. Today, after a few months, prices today are at the same $68. So this is a gain for the OPEC. They recovered good market share, almost 3 million barrels per day, but the prices are still the same. And I'm very, very, let's say, I'm very bullish about oil prices after the Q1, let's say, go into the Q2. And I think this is a good thing for the OPEC, good gain and good dynamic for oil prices, I think, in the future.
Okay, Aldo Flores Quiroga, former Deputy Secretary for Energy in Mexico and non-resident fellow at Baker Institute. Good morning, great to see you. Aldo, I mean, Shoaib was mentioning Cuba, and he touched on Venezuela as well. We have some headlines this week on also Mexico now coming under tariff pressure and cutting perhaps also supplies to Cuba. So Cuba's not in a great position, isn't it? Venezuela and Mexico both sort of limiting supplies there. I mean, give us your perspective now from the sort of producer country point of view, not from Cuba, but from Mexico. How debilitating is that from a financial impact? And do you think that it is something that could become permanent?
Well, Mexico's oil sales to Cuba were not significant from a Mexican perspective. They were less than 2% of Mexican exports.
Okay.
And they provided substantive income, the order of about $1,500 billion per year. But again, this is tiny. This is less than 20,000 barrels per day. So it was not really a dent on Mexican finances. It is really more, in this case, about Cuba, about the dire situation that the Cubans
What does Mexico gain? But what does Mexico gain by giving in to Trump? I mean, are they going to get what they want on the trade front?
Well, that seems to be the calculation, that the first thing to save is Mexico's trade relationship with the U.S. There is a special relationship and cooperation there. Now it's a very difficult calculation Mexico is making. And it is also without a doubt that Mexico stopped these exports of oil, not out of a persuasion that it was the right course, quite the opposite. And instead of now sending oil, it is sending foodstuffs and the like to keep as much solidarity as it can with the Cuban people.
Okay, Omar, back to you. Let's talk a bit about OPEC. I mean, Shoaib touched on that. I mean, prices are, much healthier, looking much healthier this month than they have been in the last quarter, at least, of last year. Yes, you've got the geopolitical support there. But give us your take on the sort of fundamentals also in the market from an OPEC sort of supply point of view. They laid off adding more oil in the last few months, and many were saying they're going to have to probably do that till the summer. But Shoaib's very bullish for prices. Do you think that we might see them start adding and wanting to add more oil in the second quarter?
It seems like you've been living in the UAE long enough to be speaking on behalf of the oil producers when you say high prices are looking healthier. I'm sure that those buying the oil
healthier than they were 3 months ago. Anyway, yeah.
But yes, yes, obviously at the moment the key driver is the geopolitical risks. But in the long run, I think that OPEC still stays in a relatively good position because all this sort of geopolitical fragmentation and this increasing emphasis on energy security and all this AI-induced increasing energy demand, which are the sort of secular long-term trends, mean that the long-term outlook for oil prices is definitely not as bad as it was, say, 5 years ago, or say just before, just at the beginning of COVID. And that's really what, OPEC's always been about. The long view and not letting short-term ups and downs derail things. And within OPEC, we've seen, a few years ago there was maybe some tensions at various points, but for the last year or two, we've really heard about tensions. Certainly the détente between reconciliation between Saudi Arabia and Iran, although the tensions never really spilled over into OPEC, having them on the same page or much closer to in terms of the worldview outside OPEC is a supporting factor to ensuring that the key players, and also Russia has good relations with both too. So what we're seeing is a situation where there's a lot more political harmony within OPEC than maybe there was in the past. And the long-term factors are further in their favor. And so really it's just a case of not rocking the boat and not getting sucked into short-term polemics, whatever the election cycle in the US or otherwise might try.
Yeah, well, I mean, it does depend on what Saudi is willing to do for the US in that front. They seem to have been listening to Donald Trump so far. But I mean, Shoaib, just back to you, talking about OPEC, I mean, one of those OPEC Plus members is Russia. And it has certainly, obviously, it's kind of in the group, but is doing whatever it needs to do. One of our commentators whose interview is coming up was saying if it wasn't for its position in OPEC Plus, Russia would not have survived its war with Ukraine. It's saved its purse, hasn't it? And that oil has kept flowing. China, is it China who's now, in principle, Russia will be depending on? India has lessened its intake of Russian crude because of the sanctions and tariffs. How dependent do you think Russia is now on China going forward of that?
Yeah, I think China is the main buyer of the Russian oil, and it will still for a long time. The scenario is the same scenario of natural gas. As I said in the first phase, that there is a reposition, a distribution of the market share. So natural gas, for example, Europe was buying more than 40% of natural gas from Russia. That natural gas is orientated now in Asia and Asian market, and especially to China. And I think what the challenges China and even Russia and even India are facing today are the challenges of tariffs. And Trump administration is all the time threatening to impose or increase the countries who buy oil from Russia or from Iran or from Venezuela, from other countries, and threatening all the time to increase those types. I think this is the main challenge for them. And same for India. India buyers, by the way, traders are avoiding now to buy oil from Russia. Let's say to escape from the US sanctions, and this is a big challenge. So now, even we remember when China approached to Canada to buy its oil, the US administration was threatening also to impose sanctions on them by tariffs. So I think this is the big challenge for all of them, and this is a kind of pressure the US is putting on Russia to sit for a negotiation table regarding Ukraine. But that's not only against Russia, it's also against China, because it's a big rival of United States in kind of minerals and even oil. But what happened the last few years, that imposing sanctions on Russia and Iran, it's allowed China and India refiners to buy oil with discount. That discounted oil allowed them, it allowed them to put product in the market with very cheap price compared to the US or the European market, and that was really a big threat for the Americans. I think this is one of the tools the US now is witnessing now, or is facing now, is how to stop the big rivals, and second biggest economy in the world, which is China.
Yeah.
So now,
Okay. Thanks, Shoaib. Aldo, let me just go to you with that, and just let's address this US energy dominance sort of agenda to pump more oil, to get more gas into Europe and into Asia. Obviously, the Venezuela activity was geopolitical rather than, you know, necessarily seizing its oil assets forever. But let's get your take on that. I mean, at the same time, Donald Trump wants oil to flow, and so he's threatening these oil producers with sanctions, and yet he's sort of not really imposing them because he wants prices to remain reasonable. Give us any update you feel about the Venezuelan situation. It's gone a bit quiet since the fun and games in December. And, you know, do you think its position within OPEC Plus is redundant as a result? I mean, how should the markets be looking at it beyond the fact that we might see its infrastructure repaired over time? But this year, what impact will we have?
Let me first start with a broader note. Speaking of what we've been discussing so far, we've been talking about how geopolitical risk is adding whatever percentage to the oil price, right? But it is considerably less if you take into account that we have expected increases in oil production from Guyana, from Brazil, continual production in the US and Canada at the levels that we've seen. These provides, by the way, the political space and economic space that the US has to also pursue the type of policy it has been pursuing in the Americas. So Venezuela will eventually add barrels, but this is still something very iffy. I mean, it's still in the making. It's going to happen, but there's a lot of institutional work that has to be done. We have seen that this new hydrocarbons law reform that is providing a significant shift to policy, a 50-year, a change that we haven't seen in 50 years in the orientation of Venezuelan policy. If there's other steps to be made for oil production to come back at the levels that we saw when it was at its historic peaks, above 3 million barrels per day and the like. So that's going to be a while. The other big player that has been Mexico is also having its own struggles with keeping production stable. So the news about the region, I forgot to mention Argentina.
Yeah.
It's really about those countries: Argentina, Guyana, Brazil, at some point Suriname, and certainly the US and Canada. And they are providing the thrust of the increase in supplies. And they are explaining this to a great extent, the projected surplus the market will be having this year, depending on who you ask, so 2.5 to 4 million barrels per day. So if you have that buffer, then no matter the political risk, I mean, it has to be huge for that to affect prices in a much more significant way.
Okay, so I mean, so taking that point, Anwar, from an OPEC point of view, you know, non-OPEC oil obviously making increasing inroads yearly into the market share, the overall sort of 100% market share. You know, many people saying OPEC Plus has grown also so large that its impact may or may not be as focused. What do you think they're looking at this today? I mean, we were saying earlier how this oil price isn't necessarily great for producers. Should they be concerned about the increased non-OPEC oil coming into their market, and will they act, as a result on that to sort of beef up their market share sooner?
Yes, obviously, you know, the any sort of the fundamental coordinating mechanisms in OPEC are predicated upon them controlling, you know, the lion's share of the market. So if that's something that's under threat, then obviously that's a challenge to the core effectiveness. However, the most obvious route is to consider expanding the membership, and the way that would happen is that if oil prices fall in a sustained way because of this production by new producers, then that's something that's going to harm the new producers just as much as it harms the OPEC producers. And so one would imagine that after a potentially protracted period of depressed oil prices, that would be the trigger that convinces some of these newer entrants to maybe not become full-fledged members of OPEC, but to operate under a broader OPEC Plus umbrella. And we saw that even the US, right, in the G20 during COVID, was playing ball once oil prices were, I think it was, the headline was below $20, and then we had the negative prices when the storage containers were full. So do not underestimate the likelihood of depressed oil prices from overproduction by new entrants acting as a catalyst for broader membership from
Cooperation.
OPEC. Yeah.
Okay. Shoaib, we have a couple of headlines on our bulletin today, IOCs on Shell and BP. I mean, both, one is about BP suspending share buybacks. Of course, we've seen IOCs do a lot of that over the last few years, but, they're now seemingly coming under a bit of pressure. Shell has also not said it's not rushing to buy assets. It has to be increasing its capital expenditure to boost reserves, some question marks. So I wanted to ask you, and there we have our survey question today, which addresses that, is the example of BP's decision to suspend buybacks for now. What does that signal for the sector? How much pressure is the sector coming under? We have three options there. They want to prioritize capital spending to boost reserves. Price volatility is becoming worrying, et cetera, or is it public pressure in terms of, they should be focusing on other things like ESG, et cetera. Shoaib, how much pressure do you think IOCs are under with these prices?
Yeah, I think this is a very good question. At the moment, I think we have to think about the new vision, the strategy of on the oil and gas, let's say, consumption and demand in the future. If you go back to 2-3 months ago, and International Energy Agency released the famous release paper saying that oil, we will stay
Peak
oil.
demand.
Yeah, big demand till go. It was talking about a plateau by 27, by 28, but 2-3 months ago, declared that oil will still staying with us till 2050. And this, I think, changed all the strategy, changed all, let's say, the vision regarding oil and consumption and demand in the world. So what we can see at the moment, I think, is oil companies, IOCs, are reshaping their strategy regarding the oil demand in the future. And I strongly believe that oil will still with us for a long time, not only for as a locomotive for energy, it's like a locomotive for the petrochemistry. And this is a good example I can give you is about China. China demand will increase only by 0.2 million barrels only in 26. Okay, it's nothing for China, but the demand will be more important thing for the petrochemistry. Let's say that low demand in China is balanced by EV, let's say renewable energy investment. So replacing diesel engines and gasoline engines with the EV, I think this has very big impact on Chinese low demand. It's really explained.
And LNG trucks, for example,
Yes,
even in the trucking sector.
Yeah, exactly. They are replacing big diesel engines with EV, with big cars, let's say, for EV. I think this is a good example how really reshaping the global strategy regarding oil demand. So now I think many big countries, let's say big companies, firms in the world are putting new orientation regarding this. And talking about this, let me talk about, let's say, ExxonMobil. If we talk about demand in the United States, which, let's say, production in the United States, which is supposed to be stabilized and even to go down to 13.4, which was like recorded a high level at 13.75 in September. So if we talk about the ExxonMobil, if we talk about oil production in the US, we have to talk also about the IOC production out of the US, and a good example about Exxon in Guyana, which is supposed to increase its production from 0.9 million barrels now to 1.5 in 4 years. And I think this is a good answer to your question, that IOC countries are still increasing their reserves in the world, and they're still investing out of their countries, main home countries, in order to increase the reserves. Absolutely. And even to increase production.
Yeah, I mean, and the European companies such as BP and Shell are definitely, I mean, for the last 2-3 years have been saying, we need to play catch up with the US equity prices of our companies, and they've been dropping their energy transition sort of targets. Yes. and prioritizing, oil and gas production. Aldo, let me go to you with that. I mean, let's talk a bit about the IEA and OPEC again. The forecast diversions are still there. The IEA has come around, as Shoaib was saying last year, and sort of pushed back its peak demand forecasts, coming a bit closer to OPEC's forecasting, but still on the short term, they're differing quite a bit, aren't they? With what they see as sort of this year's demand forecast, etc. Why are we still seeing such a difference between the two? I mean, I know they're talking their own books, but is that it? Is that the reason, or is it still becoming, is it still as difficult to actually forecast where demand is?
I wish I had a
Yeah.
the
Is
thing
China
is that
playing a big factor in
well,
that
I think this is one
uncertainty?
case where preferences seem to be also influencing the analysis, right?
Of course,
We
yeah.
know that in Europe, countries want to see more electric cars, and the IEA probably is responding to that reality. But yeah, all this talk about peak anything, by now we should be wary of it. In my experience of 2 decades in this industry, at least, I've seen so many calls about peak supply or peak demand that it's hard to just be enthusiastic about any of such pronouncements.
Okay, I mean, and what about, the parallel investments that countries are making in the energy transition? Do you think, we've seen obviously countries in the Gulf haven't backtracked that much, but others in Europe in particular are
Now, but the thing is, the backtracking that we're seeing is on transportation.
Yeah.
It's not on electricity generation, right? That's where the big story lies, and where we can see that solar energy has changed significantly the equation for power generation. So that's where we see a transition going, with renewables reaching about 10% of global energy supply, and significantly more about power generation on its own.
And
So that is not changing. That is a consolidating trend. It's not enough in terms of shifting fully the energy mix in the power sector, because natural gas will continue to be so relevant, and maybe nuclear again. But yeah, the transportation story has become less enthusiastic than what we were hearing 5 years ago, and I think that's where the adjustment must be coming from.
Omar, at these oil prices that we're seeing, okay, we've seen a bit of an improvement, but let's just get your take on Gulf economies, Saudi being one, obviously UAE, and where these sort of lower for longer price forecasts are being sort of analyzed by those from a budgetary point of view, from a capital expenditure point of view, or on the non-oil economy even. Would we expect to see a traction in Saudi Arabia on some of those projects, further sort of cancellations, let's say, or postponements on those big expenditure projects? Where's the sentiment there?
I think that for the moment, the priority and analysis from the budgetary side is wait and see, because they're looking at the security situation first. We're in the last year or two, we've been on the precipice of a big sort of explosion in regional conflict, and obviously the economic consequences of such a conflict would dwarf the impact of a decrease in oil prices by $5 or $10. So at the moment, they're just sort of in a holding pattern until hopefully the regional situation de-escalates. Then you will see some of the planning you're talking about, and the sort of a more sober and realistic assessment of where things can go. But for the time being, you may be having to spend a lot more on arms.
Okay.
You may be having to.
Yeah.
So I think
what
that's
about
really...
FDI? Okay, that's internal budgets. What about FDI into Saudi? That's even before we had the regional escalation the last 12 months. That was struggling, wasn't it?
So, and well, this is actually, again, one of the reasons it's struggling is because of the regional situation.
Yeah.
You have,
but what I'm saying is that it was struggling even before that.
It was struggling even before that, but that's because, one of the main reasons it's been struggling in Saudi Arabia, because Saudi Arabia has been involved in the Yemeni, the conflict in Yemen, and is obviously directly affected by the Red Sea. NEOM, at the time it was conceived, was in a position that was seemingly very, very safe geopolitically. The Red Sea was definitely the lesser of the trouble spots, and it was all eyes were on the Straits of Hormuz. But since then, the Red Sea's become, much more destabilized, and I think that's been a primary deterrent or a barrier to the sort of FDI that Saudi Arabia would have wanted to see, in addition to all the other, what's going on in Syria, what's going on in obviously in Israel and Palestine. So it really is a series of interlinked factors, and the sort of sharp temporal delineation that one may have imagined is actually absent, and really. It's also a contributor to the sort of detente between Saudi Arabia and Iran, because there's a sort of a cognizance in all
common
governments
interests to calm things
absolutely.
down. Absolutely, yeah. Well, hopefully that will transpire one way or another. Thank you so much to Omar and to Shuaib and Aldo this morning for joining us. We do have an interview coming up in an hour with Dr. Tatiana, and she's talking very much about this. I think Shuaib referred to it at the beginning, or maybe Omar, sorry, excuse me if it was one of you, this optionality that's now coming into the market as the new normal. China, for example, covering all bases. That's the new sort of dynamic rather than just looking at prices. So well worthwhile interview to listen into there. Thanks so much, everyone. Have a great day. Bye-bye.
Bye-bye. Thank you.
Bye-bye.